Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics for ALN Apartment Data. And this month's newsletter was titled Results Mixed in the First Quarter. The newsletter basically was a look at industry performance in the opening quarter of 2025 and then comparing that to the first quarter from past years, just kind of giving us some context and idea of where the industry stands now relative to the recent past as we look ahead to the rest of 2025 and how the year may end up playing out. And one of the things that I wanted to mention off the top is that, the numbers can look very different based on the period of time that you're including in your analysis. So if we look at first quarter numbers year over year compared to previous first quarters, that provides a picture that's different than if we look at the trailing 12-month numbers versus previous 12-month periods. And just as an example there, if we look at apartment demand, net absorption in the first quarter fell relative to the first quarter of 2024 fairly significantly, about 50% decline year over year. But if you look at the trailing 12-month data, apartment demand has actually grown over the last 12 months relative to the previous 12 months. And so you can say both that apartment demand has declined and apartment demand has increased. It just depends on the period of time that you're looking at. And so that's where the data analysis is a little bit science, a little bit art. The person digging into the data to determine, what these, in some cases, mixed signals are indicating. And just briefly, I would say that the way that 2025 has started is in some ways similar to the beginning of 2022 in that demand in the first quarter was down this year, as was the case in 2022 relative to previous first quarters. But the trailing 12-month demand numbers still looked really good. And that's because when you're looking at 12 months at the end of the first quarter, you've got 9 months in the previous year. Obviously 2021 was historic demand. So if you're looking at the trailing 12 months at the end of March of 22, you're picking up 9 months of really strong 2021 demand. And that 12-month number looks really good, despite the fact that the first quarter net absorption numbers in 2022 were not great. The same is true right now. So the trailing 12-month apartment demand numbers look good because it's picking up 2024, which was a solid year. But if you look at the quarter specifically, we see a decline. And so there's pros and cons with each approach. And I would say that one of the benefits of looking at year over year data for the quarter is that it's quicker to pick up changes in the data because you're looking at a shorter period of time. A con would be that it's more volatile, right? Because you're looking at a smaller period, and anytime your sample is smaller, your data is going to be more volatile. So just a little bit of a caveat there, particularly this time of year when we're seeing all of the reports of what's going on in multifamily. There can be a lot of variety in how people are reporting industry metrics, and a lot of it comes down to that issue in particular. So with that, one aspect of performance that was not in the newsletter this month is lease concessions. And so I wanted to touch briefly on that as well. The rate of growth in lease concessions in terms of the availability of discounts has declined now for 2 straight years in the first quarter. So we're still seeing a move toward lease concessions, but that move is winnowing, which is a positive sign. Sort of the momentum is coming out of concession availability growth. However, because of the sustained growth in availability now going back a couple of years, if you look at the percent of conventional properties offering a lease concession for a new resident, it's about 22%, which is higher actually than the COVID era peak of 20% in late 2020. So the rate of availability is quite high right now. And of course, there's a lot of variance market to market and things like that as well. But in addition to concession availability, ALN also tracks the average discount being offered, and that's calculated only from among those properties that are offering a lease concession. So that average right now is about 3.7 weeks off of an annual lease. Compare that to the COVID era peak, again in late 2020 is when that peak occurred. That average was about 4.1 weeks off of an annual lease. So we're not quite to the COVID peak in terms of concession value, but we're getting close, and the average concession value has continued to climb, as has availability. So we see concessions playing a major role in the market right now. We may see a little bit of a decline in that as we get into sort of the traditionally stronger period of the year for multifamily, the second and into the third quarter. And then we would anticipate seeing concession availability grow again in the fourth quarter. But right now, in terms of availability, sort of the headline for lease concessions right now is that we're now past where we were at the peak of the pandemic era. And with that, I just wanted to mention some upcoming events that may be relevant to you. So the week of April 14th, which is here pretty much immediately on us, I'll be speaking at the Resmania conference in San Antonio, doing sort of a national overview of industry performance right now, where we are, where we're headed. May 8th, I'll be doing a webinar for the Apartment Association of Greater Los Angeles. So if that's a market that's relevant to you, be on the lookout there across our social media channels for registration information, or you can go to their website. And then additionally, on May 28th, I'll be doing an ALN hosted webinar. So this will be not just for clients. Anyone is open to register for this. And it's going to be, again, sort of a holistic view nationally, but also with some regional and market highlights of just kind of where we are. It's obviously a very volatile period right now. So taking stock of kind of where we are with industry performance and how 2025 appears to be shaping up, and looking ahead into 2026 at some drivers that are going to be influencing multifamily performance moving ahead. So if you're interested in that, again, registration details will be across ALN's social media. For those of you that subscribe to our newsletter, registration link was included in our newsletter this month as well. And you can also find me on LinkedIn, and I'll be posting that link there as well. So those are upcoming events, and we will see you next month.